Hello everyone and welcome to the NinjaTrader Ecosystem webinar room. My name is Tiffany Sampson and I work for NinjaTrader in our Denver office. We have a very special event for you today with Will of Pure Financial Academy. I'd like to mention that it is important to understand that there are substantial risks in trading commodity future contracts and Forex. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with your broker, and it can even incur losses beyond these amounts. Please inquire at the link provided for more information or a copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation nor recommendation, but simply education in nature. This presentation is presented by NinjaTrader LLC, which is a technology company responsible for developing and supporting NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage directly at the information provided. With new tools added nearly every day, NinjaTrader Ecosystem is home to hundreds of apps and services. You can quickly and easily find the tools or services you're looking for with a simple keyword search. You'll also find information about upcoming webinars and on-demand video archive to view event recordings at the link provided. Also, if you're active on social media, please ensure to like or follow us for the best way to get updates on all things NinjaTrader Ecosystem at the links provided. NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure you are on the latest version of NinjaTrader and pick up a free live data trial, please visit the following link. You can purchase or lease NinjaTrader at the following link. And if you are just getting started with NinjaTrader, we offer free live training on a daily basis. You can view a schedule of weekly webinars at the following link. We are very excited for this unique event in which Will demonstrate Pure Financial Academy's automated trading tools and methodology. Thanks again for your attendance today, and without further ado, it is my pleasure to welcome to the NinjaTrader webinar, Will.
All right. Hey, thanks so much, Tiffany and everyone else. Appreciate your time. I know it is extremely valuable. Time is a commodity. It's something we can't get back, right? So certainly most appreciated. And hopefully you will find some benefit. We'll go ahead and get started here momentarily. I appreciate, again, the introduction and so on into that, Tiffany. So, all right, great. So we got through the disclaimers. We got through all of that good, fun stuff. We're going to go ahead and skip forward. So here's my thing. Every time I do an event, call it what you will. I like to think of it as passion. I get, really into this. My goal, I've always had some sort of an educational background, I suppose. So my goal is to, to try to help people to the best of my abilities, and then I get into it and so on. So my point in all of this is I'm just going to really go straight to it because we have a lot to cover. As I'm going through, let's go ahead and get you guys into, a little delay there. Excuse me. Let's go ahead and give you guys a little bit of an introduction. I do see a lot of familiar names in the room, so I'm sure a lot of you are familiar with PFA. But for those of you who are not, Pure Financial Academy, it's an online trading education community dedicated to supply, demand, order flow methods, and I should really even reword that because I really want to say that we go 10 steps further. Supply, demand, and order flow, and so on and so forth. Those are like support and resistance or Fibonacci. I mean, these are very common terms thrown around the industry and used in very different and unique ways, right? So our approach is what I would simplify down to just the ability to read the market, right? So price action in itself. That being said, we provide a material and software to individuals looking to learn since about 2009. We firmly believe in the power of having others. So that's that whole community thing, right? We want to have support there just throughout your entire career, if that's what you're going for, or if it's a hobby or whatever it is, right? So always a good thing there. Our mission is indeed to provide a very positive and extremely effective environment for traders and investors. Really who wish to utilize any methods, but we're looking for people who specifically want to utilize supply and demand trading methods, and we want them to share their experiences. We'll talk about the forum in a little bit. It's amazing seeing these people. Our members, they're diligent, they put in a lot of work, they're doing a lot of, just a lot of hard work, and as I said, I'll share that with you momentarily. Now, before I get moving into this too far, Tiffany's going to be so kind, if you would, to share a link with you all. As I said, I get very passionate about this. Thank you, Tiffany. I get very passionate about this, and time restraints, right? It's not my best friend or anything. So what I like to do is I'm going to be offering a follow-up event. I think once we get into this, you guys will see why, because there's just simply so much to cover, especially when we start talking about the automation and then, a lot to cover. So on Monday, I'm going to be offering a follow-up event, and Tiffany's going to be posting a link there for you guys. Just click the link. It's just free, of course. So all it is just you're signing up on our newsletter so that we will send you the invite for Monday. So you'll receive that invite over the weekend. Make sure you guys just pop out. It'll take you 2 seconds. Go ahead and navigate to that. Sign up for again, it's free, the newsletter, and then look for the weekend email. Yeah, and then come Monday, make sure you join the event. Perfect. So now we can actually get started. If you guys don't mind your questions, I'm absolutely going to get to them. Or the time restraints, I'm going to do that at the end of towards the end of the session. That will help me out substantially. All right. So first, we'll start with just the very basics. Supply and demand. I think we all probably can determine what supply and demand in a general sense is. We relate it to trading, okay? So when qualified supply zones are reached, the expectation is simply that price is going to drop, right? So we would say if there's more willing sellers at a particular location, and again, guys, this is not just supply and demand. It could be a confluence of measures, supply and demand in combination with a trend line resistance, supporter resistance, could be structure high, low resistance, could be Fibonacci returns and extensions, right? But putting all of this together, in essence, is what creates supply and demand, right? So one could argue, well, supply and demand zones create, but well, that's just a different way of looking at it, right? So what if you have all of them looking together simultaneously? Well, now you don't just have qualified supply or demand, you have an abundance of it, right? In other words, we have multiple style traders all doing the same thing at the same time. And again, in my strong and humble opinion, nothing more, nothing less, that's where the majority of orders come in, and then we would go back and we would see, oh, there's a level or a footprint left on the chart, right? But ultimately, it is that confluence that creates that, right? So we'll kind of skip forward. I know you guys are here for the most part to get out to the charts and look at the automation, so I get that. I'm going to skip as quickly as possible. Some of you may have seen some slides in the presentation before. It's just kind of easy when we're talking about automation. It's easy to kind of go through and navigate these slides. And we're simply referring to a large mass of sellers. So it's where price has literally declined away from in an expedited sense. All right. The inverse is true. So when we have a large mass of buyers and price rallies in a vertical sense, then we would refer to that as being demand. So again, supply is when price is high and we're expecting it to fall. The inverse, when price is low and we're expecting it to rally. So this slide kind of depicts that. We have large historical selling. Now, historical means, in this particular case, this is a historical supply level, meaning that it happened in the past, right? This is not a current supply level, which would be, for example, in the current direction. So here we're moving to the up. So let me grab a little pointer here. Yeah, I think I have it. Okay. So if we're heading in an uptrend here for all intensive purposes, we would look previous to that, right? So this is historical, and that's what we're referring to here. So this is just large historical selling here. So because of that reason, history does indeed have a tendency to repeat itself. I think we all know that, right? So our expectation is simply that we will have current sellers. In other words, in the uptrend, we will revert into selling, right? The inverse is true there, large historical buying, and our expectation would be that when we return to that area, we're going to have a lot of new willing participants to the buy side, okay? And we're going to get right out to the tool, our PFA Zone suite. So it's designed to reduce subjectivity in determining high probability future turning points on a price chart. We love talking about price action. So it does utilize, it's a plethora of things, guys, lots of it, tons and tons. You'll understand what I mean when we get in there and look at the automation. It's quite astonishing at what the automation world is capable of. It just blows my mind every day. But it does utilize, here's a few of them: price recognition, volume distribution, market volatility, all of which we combine in calculations and algorithms to make it do what it does. They're displayed, the calculations in themselves are displayed on the chart with rectangles and other custom graphics. Makes it very visually appealing, or at least I like to think so. They can be used for enhanced Confluence purposes, which is what we kind of talked about thus far, and for keeping track of historical data, which is indeed fully backtestable. We're going to look at that today as well. Okay. All right, so here we go. What I'm going to do quickly is run you guys through a few slides. Now, my point in doing this is so that we can get to the whole automation capabilities, right? But I always tell people, don't put the cart before the horse, right? And it's, when I talk to others, I'm essentially talking to myself. I'm always telling myself, hey, look, be patient, do this, do that, but kind of practice what we preach. You gotta be that way at least. And in this regard, we can't just jump right out to the automation, right? I've had people come and say, hey, can I just buy the automated system and never do anything again? Well, it's not that that's not possible, right? But I would strongly discourage it, and I frown upon it, okay? Because if you don't understand what's happening, if you don't understand what's being done, and you're just 110% trusting it, then I think that's probably not a good idea. Let's say, for all intents and purposes, 20 years down the road, you're well into your career or whatever the case may be, and technology just totally changes, out of our hands or something to that extent. What are you going to do? If you don't understand what the automated system is doing, how are you going to repeat it in the future, right? So what we need is repeatable occurrences. We need something that's capable of being repeated in a methodical sense, that again is simple, but can absolutely be followed both manually as well as being automated. So that's what I'm going to do here. We're going to look at some data points. This in the image here. See if I can grab my pointer there again. Okay, so this is what we're referring to as the demand zone. The demand zone, along with every other one that you would see, we include data points, and all of this is exposed in our software, and that allows us to automate things, right? So this is a demand low, and we try our best to keep this stuff very simple. I mean, we don't want to go giving it some crazy name. We want people to know exactly what it is. It's a self-explanatory type of nomenclature, if you will. So we have a demand low, we have a demand high. Using the automation, we can grab those data points and then execute based upon that information. What am I going to do with a demand high, right? So when I enter the demand zone, I could execute a long entry, for example, right? So here we just have a couple of green markers on the chart there. And again, what those are just simple graphical representations of where that zone indeed was touched and price trades into it. So we're going to start out super basic, and we're going to move into some super advanced type of stuff, and then Monday we'll really dive deep into the automation and backtesting and all that fun stuff. So here we have demand, as I mentioned before. Some other items just of notation here: demand zone volume profile and ratio. This is what you would expect, right? It's volume profile, so we can really dive in and see where the pungency of the orders have or have not indeed been filled at that time. So the way that this works is a little bit different from standard. It's not like you're looking at real-time bid and ask, right? This is looking at historical order flow. Because for us, and everyone's different, remember, there's no one way to do things, but for us, real-time order flow doesn't do us very much good. We want to know where that real-time order flow is going to be before we ever get there. So if we were to wait for price to reach where we usually are. So it doesn't do us good in our methodology, not to say that it doesn't in others, though. Applicable there, right? We have those lines on the chart. You can see they all have labels, and of course you're looking at imagery here, so it's not as easy to see. But the labels, you can of course edit them. You can make the text font larger. I've noticed, my eyes are not as strong as they used to be, so telling myself there. But no, I've noticed that sometimes sometimes I have to go in and increase the font size, all that fun stuff. I hope some of you know what I'm talking about. If not, I'm all alone here, but that's okay. But no, so all joking aside, we have these data points, value areas, like I said, point of control, and so on. So we can utilize those. We could implement crazy conditions on this. Now, when I get to the automation, we're going to start talking. You're going to hear the word conditional. You're going to hear that word a lot, right? This is conditional. It's conditional. Yeah. So we can set tons of conditions on any particular trade and then stipulate what we want to do with it, right? So that, again, creating certain conditions in order to generate trading strategies. Okay, the SD model in particular is capable of a vast amount of those. All right. So again, just trying to give you a quick glimpse at some of the data points here. This is a little bit more than just a data point. I'm actually combining a few things here, and I want you to see, again, this will be on the very basic side, but simultaneous time frame zones, right? So for example, we have here supply zones, but we're looking at multiple time frame. Now, I don't really remember, I'm going to be honest with you. I don't remember exactly what time frames you're looking at. This is probably, it's probably like 60-minute or 4-hour zones and daily zones, or it's, well, let me give you a combination. It's probably either 60-minute and daily or 4-hour and weekly, right? So this big zone that you're seeing is likely to be either a daily or a weekly zone. And the red zone, the internal there, is either a 60 or a 4-hour. So suffice to say, we're looking at two different time frames simultaneously. And we can use that information to our benefit, right? Because the whole multiple time frame thing now is in the past. We've been doing this for a long time, and we try to continue our innovation. But in the past, we've had to bring up so many charts, you know, and look at the right, you know, we got 4 or 5 screens just to look at charts. Well, the reason for that was because we needed to pull information from the other charts. So that is, I don't want to say eliminating. For us, it does eliminate it. Some people like looking at the noise. We do not. In fact, man, I tell you, it can generate unnecessary emotions. And so, you know, for me, I would rather stay away from it. But you can do that now, and we can put this all, say, I'm throwing a hypothetical. Let's say we want to pull out weekly zones on a weekly chart with 4-hour zones for minimizing our risk, right? So now we can take smaller risk tolerance, but we never actually have to go look at that 4-hour chart. It's all done right there on the weekly for us, okay? So simultaneous time frames. We have a supply high, supply low, and we also have another supply high and a supply low. So these are what we call primary and secondary. We could, you know, set a condition on that. We could say I only want to take that 4-hour level if within a larger time frame level. So that's one condition, just kind of an example there. We'll go a little bit further here. So as you can see, we have the simultaneous time frames, but we've also included our value area high data point. So now we can put even further conditions on it. And we can say, here's our primary high and low, here's our secondary supply high and low, and we're looking for our secondary supply value area high. So now I can stipulate that I do indeed want to take a 4-hour supply zone, but I only want to take it if it's within a weekly supply zone, and I want to enter at the value area high within that supply zone, right? So again, we're starting to really kind of push the boundaries, and I have not even begun yet. So this is just the basics of the zones in themselves. And do remember, guys, that I love, you know, the terminology. I love it, but at the end of the day, supply and demand is it's a very broad term, right? And for us, when we say supply and demand, we're not just saying a rectangle on a chart, okay, or something like that. I mean, there's so much more that goes into it than that. So, you know, we talked about that a little bit before, but confluence measures are very big. These are built into all of our zones. They're also just built into our software in a manual sense too, so we can, you know, put those anywhere we like. I'll show you that momentarily as well if I have time, but again, don't worry, Monday I got you covered. We'll take as much time as we need. Suffice to say that here, what you're looking at is an entry, a stop, trigger line, and then up to 3 targets. So we can manipulate these any way that we want, and we can toggle them on off at any time. All we have to do is click the exterior of our zones, and we'll find a button there, and we can literally click it directly from the chart. So there's no need to go anywhere. We don't need to go into, for example, NinjaTrader utilizes what they call ATM strategies. Amazing. I think that they're the best thing since sliced bread and that everyone should use them, right? But what it really is a bracket order. And so it's submitting additional information with your entry. So OSO, OCO orders is what they technically are. Order cancels order, order submits order. So let's say for those of you who are new, you go out and you place an entry in the market. Well, if you forget to place your stop and targets, you're in trouble, because if that goes against you, you are going to, it's kind of limitless as to what you could lose if you're in the futures markets, especially, right? Equities, it's going to go to zero. And that's kind of what. But if you're working with leverage and margin, it can really burn your bottom. And so we don't want to do that. And this allows us to literally just click the button. And it makes, I would say, the predominant benefit here is time. For myself, at least, that's what this is all about, saving myself time so I don't have to go through the troubles of monstrous, calculations and manipulations, all that good stuff. All right. So we have a demand stop, we have the demand entry, this is our trigger, and 3 targets. Okay. I think there's a little bit of delay. Let me try to click that again. There we go. Okay, so the next thing, and there's only a few more slides with this, we're getting straight out to the charts. I'm doing okay on time, better than I usually do, so bear with me if I'm talking 90 to nothing, but I tell you, these time restraints do get me. So we have the altitude grid here. The altitude, what we refer to as the altitude, is a perceived value, right? It's just a perceived value of any said market. It's relatable to whatever you're looking at. So if I'm looking, let's say that I'm a long-term investor. Well, I don't want to look at a 1-minute perceived value because I don't care. It's just going to go all over the place and it's irrelevant to me. But if I'm long-term, I definitely want to be aware of the altitude on the larger monthly chart, for example. Very much so. If we're in an area where the perceived value appears to be extremely high, and that's depicted here with this red area, okay? And then the inverse is true. The green down below is low perceived value. So those are just awareness. It's just making us aware. Hey, you might want to consider that you really already missed. The train has left the station, so to speak. Right? It's kind of too late at this point. Everyone has their own methodology, but we always say, look, if we can attempt to get in from the beginning, just hold the position. We would rather get in from the beginning and hold the position as opposed to continuously trying to enter over and over and over again. Because what that's going to happen, what's inevitably going to happen is we're going to take unnecessary stop outs, and then you're going to sit back and say, man, if I just would have held that position, it would have gone way in my favor, right? So that's a whole different story. And again, we can talk more on that Monday. But our philosophy is just get in the right position, hold it until the right exit location, right? Now, we're not always going to predict that perfectly, but the idea is, to put it in simple terms, be the first to the party and the last to leave. Right? So that's our altitude grid. What we can do as far as being conditional there, we can take and we can set conditions that say, I absolutely want to be a buyer, but it must be within altitude grid zone 1 and 2, right? Let's give another hypothetical. If above grid 3, then don't take any demand, right? Or anything else, right? We're just talking about supply demand zone. But when we get out to the chart, you're actually going to see something totally, different, so which is great. Meaning trade plan that I have kind of pre-built for today. So anyway, we could take RBRs and DVDs, which are continuation patterns for us. You could take trendline breaks, structure, dynamic alterations, all of the above, and you can still set the condition of where you want to take that entry. Because at the end of the day, it doesn't really matter how you get into the market, so long as you get into the market at the right location. Again, if we wanted to enter down here, right now it's easy to see that prices rally because we see it rallying, but let's say that we didn't and we want to be the buyer down here, right? Well, we can do that, demand being one of them. And let's say that we wanted to do a trend line break or something to that extent. I still need to, we can still, we can still set conditions regardless of what our entry types are, right? And that's kind of what I'm showing here. Hey, look, we can require supply to be, or any other entry type to be in grid 3, 4, 5, and so on and so forth, right? There's some examples for you. Okay, so we have built-in automatic trend lines. Love these puppies. They've really helped. Now here's some cool information. Not only can we use these for trend line breaks, but we can use them for trail stops. We can use them for reversals. We can use them for all kinds of good fun stuff. So it's actually pretty cool when we get into the SD model capabilities and the very basic simple thing of a trend line, what it can actually achieve. So it's quite astonishing. Here I'm going to give you a couple of examples of a condition, right? Told you you'd hear that word a lot, or conditional or what have you. Here we have a demand zone high. At the current time, when we revisit that demand high, the uptrend is true, meaning that we do have an uptrend. So we can set that condition and say, I only want to execute my demand entries if an uptrend is present. Okay, so for that reason, I'd absolutely take this. There indeed is an uptrend. We have another demand zone high, and the uptrend is indeed present. So we would actually have two potential entries there. We can go on further to stipulate I only want to take one entry off of each and every zone, and if I'm wrong, I'm wrong. If I'm right, great. So again, whatever our minds can fathom up, we can try to build it. All right, so here's, based on that condition, here's something to be aware of. That demand zone high, the same one as previous, notice how there's no green, little entry signal right here. This is because the uptrend is not present, i.e. it is false. Ergo, we would never have an entry there because that condition was not met to be true. All right, and here's our RBR DVD continuation points. You can see the little hash lines. Of course, we can make those fancy and look whatever we want. We want to do crosses or dots or something like that, but we like to keep it simple. So those are our continuation data points, and boy, oh boy, do we love using these, let me tell you. So I'm just going to throw out a few of the entry markers there. Okay, so the red would indicate a short position, and the green would indicate a long position. So I'm just going to kind of move forward. There's multiple. And if you notice, I'll go through with my crosshair here in just a moment. Actually, let me step back. There we go. So if you notice right here before that red marker, there is a red line. If you notice over here, there's your red line. Over here, there's your red line. And then you go green on the green line, right? So again, these are just continuation patterns. What do we use them for? We help ourselves get into something that is already occurring. So if there's an uptrend, maybe I don't have the ability to get on board from the absolute low or from a demand zone or trend line break or what have you, but I really know based on my analysis that I want to get long. So then of course we can step in and utilize our continuation patterns. So that's what these are used for. Now I will say that's one thing that they're used for. Specifically, what we use them for is getting on board from the very beginning of said move. So we don't use these just in the middle everywhere. There are very specific locations in which we use them to create just a very powerful entry. So here's what we talked about a little bit. So we have an absolute multitude of data points, and again, we've only talked about a few of them. So let's go ahead and move forward and get out to the charts. And as we do, you'll see a few of the things that you're seeing on the chart there. You have market structure. What's important to note about our market structure is it's not a zigzag indicator, guys. When you're looking at this, you can see how it's not pulling out the swings in a normal sense, right? This is the dynamics of the market, very different. So it's not your basic, you can't find this, it's a very custom algorithm that's doing that. But at the end of the day, it's just going to show you peaks and valleys, highs and lows. And again, it's designed to show us the structure and the dynamics of the market, what's the direction, and then we can set a condition on that, which is what you're going to see today. Pretty fun. Okay, we'll talk about the alerts. Let's do this because we're already kind of pushing on the time a little bit. So let's go ahead and get out to the charts here. These are real-time audible alerts. Love talking about them, but we'll do that on Monday. We'll talk about our user interface on Monday. All of our user interface is custom built. It's very efficient, and you don't have to even, once the software is loaded, there's really no need to even load the far too much. Too many settings, and there's too much functionality to do it any other way, so we ended up to this momentarily. Let's go ahead and get out to the charts. There we go. Hopefully you guys have up my charts here. Should see S&P on the left, it looks like, on the daily, and then S&P on the right, which is 60-minute charts, what I have up there. Gotta love NinjaTrader, man. You know, they make it pretty easy in many ways. We have all these tabs down here. Used to we had like 10 charts, right? Well, now we only have 2. And we're utilizing the tabs. As you can see down here, we have up the micro S&P, NASDAQ, micro NASDAQ, Apple, gold, or micro gold, and so on. So we can, we can pull all this in. Our chart setup's not necessarily relevant for today, but on Monday I'll be happy to share that information with you. Okay, so if we open up this chart here, you can see what our software is doing, and this is just real time. I always love it so you can see what's happening in real time. I'll scrunch my chart up and let you see. So today in our live room, we talked about where the range, same as yesterday, we had a very specific range. We said this is what it is, these are the exact numbers. Ended up trading within it all day. Did the same thing today. We said, look, here it is. We're not going to be the buyer for specific reasons, and here's where the sellers are. There was I don't know if you guys are aware, there was a nice little gap close down into some previous demand down near Globex low, all that fun stuff. So so there was another set range in the market today, and every day we talk about this stuff. We go over it Tuesday, Wednesday, Thursday of each week. We walk through. Today we found, I don't know, there was probably 3 or 4 potential educational setups and so on. So we kind of look through those, and then we'll go over the SD model. The SD model, we're so close, guys. As a matter of fact, let me pop over here to it. So we're so close. There's just a couple of things that we're finalizing, which is great. So we're going, as we promoted in the event there, we're going into beta with this. So what we want you guys to do is, once you see everything on Monday and we really get into the gist of it and you see the capabilities, we're going to keep you fully updated. We'll offer, events and updates, things like that. So you'll be fully aware of this the entire time, everything that's happening and all of that. But let's get right to it. Let's go ahead and talk about the automation. Now, on the top of our chart here, this is our menu items. We have user inputs, and then this one right here is our strategy inputs. There is a ton of information here, like I said. So in our user interface, we categorize. Can you imagine all of these settings, right? So there's a lot of information here, and it's nice and organized so you kind of know exactly what it is. We can go talk about the trend lines, and we can utilize multiple time frame trend lines and the trend ID and the trail stops and all of that other good stuff. So there's a lot that we can do here. But that being just our user interface there, the same thing goes for our strategy inputs as well. We have a unique template system that we use, and again, you don't have to go anywhere once you open the chart. It's just kind of right there. Okay. All right. So on the chart here, you're going to see some wacky stuff. It's kind of like, what are we looking at, right? These blue lines, I won't go so far into it, but it's what we call missed entries, right? So let's say we're in a trade, another trade occurs, but we don't enter it because we're already in a position. Or perhaps it happened outside of our time filters. Let's say that I only want to trade during 9 to 3 or something like that. Well, if a trade occurs at 6 p.m., obviously that's outside your time parameters, and that's what you're seeing there is just those blue markers. It's indicating, hey, there was an entry, but you didn't take it for whatever reason, okay? For example, these right here, I can see that they are, in other words, we're already in a position, so there's no need to take additional ones. Okay. All right, so let's talk about what we're seeing here. In the strategy itself, I'm going to go through some tools here. Number one, we have tons of information here. These are just the zones in themselves, right? So the zone, and you're only seeing one, by the way. This is a time frame setting, so we can alter that to be whatever we want. But I'm just keeping it very simple. I love the daily chart. And I should also iterate to you all that when looking at the SD model, it is not our goal nor our philosophy to set a scalping systematic approach or any really short term. Guys, look, at the end of the day, our goal has always been to build this to make money, okay? Now, I'm not going to go into that. We're not going to talk about making money just because that's not the right path for us to go on. But at the end of the day, just understand that it's never been our goal to do that, and we're not going to, right? So we kind of put, I don't want to say put our foot down, but at the end of the day, I mean, we've been doing this for a decade and so on. And at one point, we kind of said, look, we've been doing this for you all, and we're not going to do it anymore, right? So the whole thing was, here's our philosophy, and then it is applicable to all time frames, But the problem is we kept saying it, we kept telling people, look, short-term, like scalp trading and so on, some people can make it work. That's them, and great. I applaud them because it's not easy. It is extremely hard, as you guys know. But that's not what we do. So if that's what you're looking for, I unfortunately am going to have to tell you that we're not the right fit. We are looking to be in the market and to make money long term, right? So we're talking about over the context of months and years, not days, okay, not weeks even. So we're building things. The SD model, for example, is built with that philosophy in mind. It is generated to with the goal in mind to make money, of course, over the long term, not on a day-to-day basis, right? So let me give you an example. What we're doing here is we're utilizing the dynamics of the market, and you can see some of the tools that are built in here. So let's look at those on the chart in real time. We have the market structure, and we have our supply and demand zones. You can see, I mean, guys, I'm not just saying this. You can ask anyone that uses our software. They're extremely accurate. Do they fail? Absolutely. Yeah. I mean, does support and resistance fail? Does Fibonacci fail? Show me something that doesn't fail, and that would be amazing. But yes, of course, they fail, just like anything else. But if you get your risk to reward ratio, your locational trading right, you get all of that intact, it's just a strategy, right? It's just a different means of entering into a market. That's all that really is. So they're not designed to be 100% accurate. They're designed to get you on board in the correct location for the highest possible success, right? And that's what you're looking at here. But that being said, they are extremely accurate, as you'll come to find. And you'll see this on Monday. I'll look at any time frame in your chart, whatever you guys want to see. I'm happy to do that. I always enjoy doing it in real time so that you guys can see it. But right here, as simple as it is, we're utilizing our unique market structure. So let me just kind of minimize this up a little bit. I scrunch the chart up. There we go. So you can see our market structure really eliminates tons of swings in the market, and it really eliminates the noise, I guess is a better way of saying it. So all these swings in through here, they're just literally in a range-bound market. So there's really no reason in defining swings in the market if you're just trading within a range. The better way of going about that would be literally just to trade the range itself, right? In other words, trade the high of the range, trade the low of the range, but don't get wrapped up inside of the range because, again, we can get our heinies handed to us, right? And that's no good. No one wants to do that. So what we're looking at, guys, is using the dynamics of the market. And I'll just grab an arrow here, for example. So this entry, we're going to take an entry, an executed entry, based on, let me just go into the settings here so I can show you. So if I load one of our templates that we're looking at now, we have demand structure. Okay, I'm going to show you some of the conditional factors here. So we can set a demand entry. We have many entry types. We can stipulate how many trades per zone. One of the great things, if we go to alter this, you'll notice that there are other settings that appear, right? Pretty unique there in itself. So we have demand entry type here, 1 zone per trade. We want to dictate that the market structure must indeed be up. Okay, so this is a whole different condition there. It's saying, well, not only do I want to take demand, but I require, in fact, the market structure be up when I take that demand. And if it's not, my condition is not met, excuse me, and I will not place that entry. So we could do the same thing with trend lines. We could do the same thing with trend ID. We could do the same thing with the altitude. And of course, we can apply all of our zone parameters as well. We have exit parameters in through here. We can set a maximum dollar or tick amount. Pretty soon we'll probably add percentage in there as well, but for now we're pretty good on that. We have target multipliers and all of this. I don't want to get too complicated, but basically what we're saying here is take one single contract, just one, okay? That's it, in the S&P futures market with a maximum risk. Now we've set a $5,000 maximum risk. Rest assured that that's not always required, and you'll understand how this is not going to be met in just a moment. Okay, we're looking for a 3-to-1. So our target 1 is a multiplier, fixed variable type, which we'll talk about again on Monday. Too complicated for time limitations. Essentially, this is a 3-to-1. Let's just call it that, right? This is a typical 3-to-1. We have other variable and fixed options, but your fixed variable is pretty much a standard 3-to-1 or target 2. So again, we're trading one contract with a multiplier of 3. So I would like to take a 3-to-1, please, is what I'm asking. No, I want to take a demand zone if the market structure is up. I want to exit that market when the market structure goes down. Okay, so in other words, when the direction changes, just take me out of the position. Now I've set a condition on my exit. All right, I can do the same on Trendlines, Trend ID, and more. Currently I'm keeping it very simple, but we could set targets at our opposing zones. Okay, that's one way of doing it. So these are our zone targets for the primary as well as the secondary of all zone types. So we can really go way out there with where we want to put those. Our initial stop in this case is going to be the market structure, and then we also have trailing stop options, which I am not even utilizing for this particular example. And there's reasons for that, guys. I really don't like to be too aggressive with my exits in the market. What you'll come to find is that a lot of people lose money because their risk is too small. You know, the stops are too tight, and I get it. Trust me. Hey, look, we all been there, right? But at the end of the day, oh my goodness, the markets there's so many options out there nowadays, and you can really achieve the same thing. You know what's funny, guys? No joke. As we're sitting here, I just got a text alert. It says the euro-dollar demand zone has been formed at 1.1049. This is an automated email from the power zone, up in the PFA zone. Isn't that funny? So apparently a demand zone just got hit on the euro-dollar, if you want to take a look at that. Daily demand zone, I guess. So that tells you a little bit about our alerts. You can get text messages, emails, audibles, and all that. So anyway, let's go back to, I just thought I'd mention that. It's funny because it just popped up on my phone. All right, but back to the stops, guys. It's just that there's so many options with it. Let's say you have a small account. Well, there's Forex, there's micro futures, there's equities. Yeah, if you want to go there. I love equities. I do. It's just not for small accounts. So futures, Forex, great. Forex obviously is great. You can trade like $1 if you want to. But the micro futures, it can be your best friend. Very small risk, very small multipliers, and the leverage again is just super tiny. So you can trade, a much larger area compared to what you can do on the actual mini futures. Okay. All right. So these markers that you're seeing, these are, for example, this one down here. When this entry took place, this is the stop. So these are pending stops, and these are pending targets. Remember, I told you I only because of other criteria and so on, but that's what those are. You can see down here at one point there was an entry that was being placed way down here. There was an entry that was being placed way up here. Of course, it got canceled before it could get there, and so on. So with the automation, it takes it and it just really is a powerhouse on the back end. It's calculating so much, and it can keep track of all of it, so it knows when to execute orders, when to cancel them based on what criteria, and so on. So we can use all of that information to our benefit. Again, with these are, I told you guys you can kind of open this up. Now, if you want to, we can go into the settings. This is an RB. It's nice that you guys can see this in real time, actually. So there's the RBR label right there. That's on the hash marks that we were looking at earlier. This is an RBR label 3350. Essentially, that is a continuation pattern. Let me just throw this out there with what we talked about today in the room. This is not an RBR or continuation pattern that we would look to buy into. Reason being is because it's literally going right up into the all-time highs. Okay, so we want to be very, very careful with that. And guys, I'm so sorry. I did indeed. I'm thinking that I have time for Q&A, and it's already been 45 minutes. I sincerely apologize. I'm thinking 5:15 for some reason. Not a problem. So here's what I'll do. Let's just go through the performance real quick, and I'm just going to go ahead and end on this note. So what you can see is over time, not super impressive. You're only taking 3 trades, right? So if you just keep going back with the same, and it takes just a few seconds to load there. But oh, sorry, Tiffany. I can't believe I was thinking 15 after for some reason, so my sincere apologies. So if I go back 1,000 days into the SD model based on the trading that we have right here, the plan, you can see how it just continues to increase over time. So this is the goal, never to be perfect, always to be consistent, right? Okay, guys, hopefully I'll see you on Monday. We'll actually go through the back testing. We'll do them. We'll go through multiple conditions and set up different trading plans and things like that, okay? I sincerely wish that I would have had time for Q&A and also apologize. Thank you so much for your time, guys. Really hope that I got through enough of it. Tiffany, thank you for your patience and your time. God bless you, and I'll see you guys all on Monday. Make sure that you get back in there. And Tiffany, if you will, let's get up our slide because it does have some discounts on there, and you guys can at least look at that as Tiffany is concluding. Thank you so much, guys.
Perfect. I'd like to give a special thank you to Will for a great presentation. Everyone in attendance here today will receive an on-demand recording of today's event, so please keep an eye open for that email. Additionally, NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you found value in these events, we hope you will attend them on a regular basis. We would also like to remind you the information provided in this was of Pure Financial Academy and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spend with us. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem.